Hello and welcome to the DeVere webinar series, the DeVere live webinar series, live from our DeVere Shanghai office. I hope you're all well and are doing okay wherever you are around the world. I know people are logging in from as far east as Australia and all the way across to Europe, and a lot of us here in China as well. So today, a great topic, we have millennial investing. Okay, so we've got a lot of people logging in as I speak, so it should be a really exciting webinar. Well, first of all, what I'll do is I'll run through the format, give you an idea of what's going to happen. So first of all, we are going to do a poll. We want to know your opinion. What are the challenges that millennials face when it comes to investing? After that, I'll be handing over to our two excellent presenters, Chiu and Deshawn Peterson. I'll introduce them in a moment. And following that, what we will do is we'll have a Q&A. Now, during the presentations, I'm sure there'll be questions that come up, and we've had plenty of questions come in already as well. You'll see at the bottom of your screen, there is a chat box, okay? In that chat box, I want you to select all panelists and attendees, and then you can write your question and put it in there. Then everyone can see the question, and that will inspire more questions. And what I'll do is I'll jump in at the end, and I'll ask the questions to the panelists. And then at the very end, we will give you the opportunity to take action and reach out on the act upon the information that you've heard today. All right. So let's on that start with the first poll. So what is the biggest challenge facing millennials with investing? Is it not knowing where to start, a lack of time, overanalyzing, too expensive? Is it fear, or is it something else? Is it another challenge? Okay, so I'll leave that up there, and you guys can answer away on those questions. And while you do that, I'll introduce our two speakers. So during the second half of the presentation will be Deshawn Peterson. Deshawn is the founder of Fit Budgets. He believes that financial literacy is universal and focuses on helping those around him with practical, easy and actionable financial steps. And the first presenter you will see is Chiu. Chiu supports and leads the millennial community to become financially fit so they can focus on what truly matters, living their dreams. And with that, Chiu, I'll hand over to you.
Hello, good evening, everyone. Thanks for the introduction, Will. Hi to Deshawn as well, and to everyone listening to our webinar tonight. Very happy to share some of the things I do on a day-to-day with other fellow millennials and in general expats living across East Asia, right? So as he mentioned, one of the things I do is try to focus on financial planning, but with an idea of financial fitness, because it's very similar. We need to do, this is an ongoing process. It's not just I went to the gym once and that's it, I'm fit. It's an ongoing process to remain on the same fitness level. Same for our finance. So it's very interesting because as millennials, we have a very different situation compared to other generations. Everyone has their own challenges for sure. So we're gonna focus on what are our challenges. And also because the financial industry tends to be a little bit outdated. So we are gonna find a way to bring these things down and see what actually is relevant to us. So now let's focus on one of the headlines that you can find anytime that you take millennials and retirement or millennials and financial planning. There are so many buzzwords out there that we don't know how to save, or we spend all our money in avocado toast. I do that as well, but that doesn't mean we're not able to reach financial freedom. But there's some things that are real. We did and we do are experiencing right now a financial crisis, and also some of us, because of course the millennial generation is also quite broad. But so the the older millennials, when they just finished their studies and started working, they also begin their career during the 2008 crisis. So we had these very big events that also affect the way we start our journey in the labor, right? So what other things, especially of course, depends where you come from. There are things about student loans, things that other generations didn't have. Also affording a property. Back then, some other generations, to buy a property, maybe it would take 3 to 4 years of your annual salary. For us right now, it can take 10 to 12 years of your annual salary. So it's definitely a difference and a gap that also creates this gloomy idea of, oh, can millennials actually achieve financial freedom? Well, let's see. I think we can. So it's not all about saying we are in the worst position, because also right now there are opportunities. So now let's talk and let's define how we can actually achieve financial freedom and focus on how can millennials take action as well. So one of the things that I notice very common with most of my millennial clients and friends as well is that it's hard for us to picture or place ourselves in the future, especially when we talk about 10, 15, 20, 30 years later, because we don't know what's going to happen. And even myself, I don't know where I'm going to be in 20, 30 years from now on. But what I do know is that I'm going to need something to continue supporting my lifestyle. So this is a graph just to show a more visual idea of, think about on your own currency, because I know we have people from all over the world. And so think about your own currency. You may think of dollars, euros, whatever. So because we're in China, we just try to make it simple. So let's imagine that one of your goals is to have 1 million in assets in 2050 for whatever reason. Maybe you already did a calculation that that's how much you need in assets to be financially free. So let's imagine that's your objective. So what I'm going to present here is what's the cost of delaying that decision. Because we tend to sometimes push away for whatever reason or excuse, like saying like, maybe right now is not the best time for X, Y, and Z. So, okay, that decision of doing something later has a cost. And here's the actual impact just by numbers. So if you decide to start today, 2020, from zero and say, okay, I want to get to 1 million in 30 years, and I decide to just take approach of saving on a monthly basis, getting an annual growth of 8%, what I have to do is to put 705, in this case, UN, and now get to my goal. What happens if I delay my decision by 10 years for X, Y, or Z reason? Then I need to add an extra 1,000 every single month. And you can see the difference of just delaying little by little. And I'm just not gonna focus too much on the numbers. Try to picture this. Your goal is like an analogy, it's like going to a hike. So your goal is always there. You already know what is it. It's always 1 million. So if you start in 2020, if you just see the line, think that that's a hike. It's easier to do that hike. It's not too inclined. Yeah, it's gonna take some time. It's gonna take some hard work, but it's doable. Once you start to delaying that, the goal is still the same. It's 1 million. It's still there. But now because you decided to wait 10, 15 years, then the climb gets more steep and it's gonna be harder. So that's the real cost of delaying. And it's also because we right now, even more than ever, we are in a society that requires and aims for instant gratification. We want everything now. If you order S.M.A.R.T, you want it now. If you go to Taobao, you want it now. So especially here in China, even faster. So I'll blame the society as well, but we have to acknowledge that things that actually we need to take the work to do the groundwork to actually get somewhere. So, okay, now let's talk about what can we do to actually start reaching our objectives, because we haven't mentioned that yet. So I always tell my clients that planning is like playing a video game. You cannot go to the last level of Mario without doing the first introductory levels to see where you are, right? So it's the same for the financial pyramid. You have to earn your right to invest. You cannot just go to start buying stocks and doing something if you don't even have a strong foundation to just give you that peace of mind that if something doesn't turn as you plan it, you're gonna be all right. So first we need to focus on the base of the pyramid, a very strong foundation. And for this, there are two main components. One is having medical and life insurance because things happen. I'm sure that many of you have seen those WeChat groups that are trying to collect money because X person had an accident in Guangzhou and then we need to support them. And of course, we all want to chip in something, but you don't want to be that person. So you need to be sure that you are going to be okay if something happens, especially because we are all foreigners living in a different country with their own challenges. So just make sure that you are gonna be safe in that sense. And the other one is having savings. So this one is an emergency fund. I'm gonna talk about more in details of what that may look like, because every emergency fund for every person is gonna be different. But once you have those two main components very solid, then you can go to the next level, because you feel that, okay, now if something goes a little bit different because coronavirus or whatever, I have my foundation, I'm gonna be all right. The next one is having a steady investing strategy. So this one is first focused on the main things. So one is, well, in general, it could be planning for either retirement or financial freedom. And the other one is having also like real estate. So that's gonna be a little bit more steady. Probably it's not gonna be as sexy when you have a conversation with your friends, but at least you know that's the next level that you should do. And the last part is the one that you hear all the times on the news, that when you're watching YouTube videos, and sometimes the ads will pop up and say like, these are the stocks or funds that you should be investing. That's the last part that you should focus on, because usually that tends to be the more volatile, that maybe can give you the higher returns, but also you don't want to do that without having a strong foundation first. So that's in terms of how do you start. So it's level 1, 2, and 3, if you want to call it that way. Think about yourself, where you are right now. So just to make it more clear, because right now this is just a vague structure. So let's talk about something really important. So this emergency fund, as I mentioned, it will vary case by case. And right now is a great example of why we all need one. I'm sure that many of you have friends, or hopefully not, but even yourself, that maybe are experiencing some salary cuts. It could be reduction or completely cuts, or even laid off. So this is when your emergency fund is gonna give you that peace of mind. So if you are single, no one else relies on your income, a good solid advice is to have at least 3 to 4 months of what you usually spend on a monthly basis. If you don't know yet what you spend on a monthly basis, that's step number 0, if you want to call it that way. So yeah, have 3 to 4 months. If you have a partner, whether you're married or not, but you think you are in a stable relationship, you may want to have a bit more, because sometimes if the partner doesn't have the income as well for whatever reason, I'm sure you'll try to support each other. So this is just a guideline, of course, but just to give you an idea. And of course, if you have dependents, whether that's children or family that rely on your income, then you want to have 6 to 8 months. So that's the first actionable step that you have to consider right now if you haven't yet. So think about it. If you already have this, great. You can go to the next level and start thinking what else I can do. So that's the very basic thing that you need to consider. And now we can talk about planning. So it's not just having ideas and I want to grow my money with X percentage every year. That's not a realistic goal. Is try to focus your strategy based on what goals you have. And we all have very different objectives. So I will break it down as a time frame. So I'm gonna give some examples of what is a short-term goal, a medium-term goal, and a long-term goal. All of you are gonna have your own. So just to put more, you just try to put a price tag on any idea you have. So let's say a road trip in Europe will cost you 40,000 yuan, then you already know how much you should get in the next 12 months when you plan to do that trip. Or another one that is very common with most of my clients is to have eventually a property for investment. So that one, most of the times when I talk to some of my clients, maybe they have an idea of what it may cost, but most of the times it just stays there as a random idea. So try to make it as smart as possible. So you already know the time frame, maybe 5 years. So you already have an idea of what's the price. So now that you have the price, and since this is an investment property, not where you're going to live, so maybe you're going to be looking at having a 30% deposit of the value. So in this case, for a $250,000, then you may need $75,000 for a deposit. So now that you already have this in mind, so you can actually make a strategy. And now you know that, okay, I have 5 years to accumulate 75,000. How am I gonna do it? Am I gonna try to get to that amount by saving on a monthly basis, or I'm just gonna wait until I get my bonus every year because I get around $20,000, just to give an idea. Then now you have options to create an actual strategy rather than just having a vague image of having a property at some point between 3 to 5 years. So every single goal that you have, make it as specific as possible. Same for the long term. And that's actually the most important one, because, and the one that most of the time we leave for the last because it's the longest or the furthest, so we cannot picture, but that's the one that usually requires the most assets. So in this case, for someone who maybe want to have retirement in 30 years, receiving an annual income of 60,000, a passive annual income of $60,000 a month. So this person may need 2.9 million in assets. So why we should focus on the long one first? You already saw the graph. Think about the hiking thing. The goal of this person may be $3 million, and the more this person delays the goal, the steeper the hike is gonna be. So this is from my side. I just wanted to give you a basic framework of how you can start creating your own strategy. And I'm gonna pass it to Deshawn so he can actually give specific advice on the different strategy we have. So thank you, and I'll see you back at the Q&A.
Hey everyone, I'm Deshawn. So let's just get right into it. So really through my segment, I'm really just gonna talk about actionable things and just strategies that I believe, and most of us here as advisors think that you can take from zero. Because us as millennials, or the few who may have a lot of money, or again, they have the emergency fund and they're just thinking, okay, where can I start? And the main two strategies are short-term investing and buy and hold. So the short-term, again, is what Armando was mentioning about the sexy stuff. So the more complex, high risk, high reward things, such as options, futures, shorting a company, or even certain things like structured products. But I'm not going to say that one is better than the other, but we just want to communicate the value in the boring stuff, like the turtle stuff, like the buy and hold, as in just riding the wave and being as passive as possible, and not letting, how can you say, all of the distractions from the internet, from the WeChat groups, really just deter you from your own strategy. So here in the next screen, we'll be able to really identify it. So here's the ideal portfolio. So no matter your end goal, as Armando mentioned earlier, we really want to divide it up into a similar ratio. So if you know that in 30 years that your ideal portfolio or your ideal net worth is going to be 3 million, 4 million, 5 million, 6 million, 10 million, we really want to divide it into these three main segments. Whereas we know that the emergency fund is going to be, again, that a part of that short term, 5%, and some spending money. So just again, the emergency fund, if anything happens, spending money might just be like treat yourself day, right? Or you might go to, for those here in Shanghai, might go to Fuzhou Lu bookstore and just go crazy, right? But also after we have acknowledged that, we really just want to put everything, or really start to build the long-term things, because not only are they going to take the longest to build, but also they will actually give you the most profit because you're holding them the longest. So though we have like pensions and equities and property here, it's really even about 50-50 if we were thinking just of a outline or just like an ideal format. This can change, based on you, whether you want to be hands-on or you want to say, hey, I want a ton of properties from the US to Thailand to Spain to the UK. Or you can just say, hey, I'm not interested in property. I want to be completely hands-off. I just want to be as passive as possible. And the pensions and the equities might increase from 50-50 to maybe a 70-30 split. Here in the middle of the 25, this is where the spice kicks in, right? So this would be like all the things you might see on the news, such as like oil, right? Oil is very volatile. Today, oil is in the negative, first time in history. But you might think, hey, I want to spend 25% or get in some of that action because you believe, or you and your advisor believe, that is going to rise in the future, is going to surge after COVID-19. Or also this could be more towards your own personal endeavors. So alternative investment doesn't have to necessarily be an asset, but it could be you and maybe a small business that you're owning or you're developing. We recognize here in China that there are ample resources. A lot of people are getting to export or catering to services or food and beverages to the not only expat community, but also to the local community. So we don't want to just turn off anything, but we don't want you to say the riskier thing should not be the bulk of your portfolio. So we should also just do it in stride, but make sure that it is aligning with our overall strategy. So let's go on the next slide here. One thing, small rant, right here, small rant. Block out the noise, honestly, just get rid of it. Because there's a million people on YouTube who are telling you how I traded $500 to, $1 million house, or how I bet on the futures, or how I day traded and self-taught myself. But you would never see on YouTube all the people who have tried these strategies and failed and now are in the unemployment line. Or you would never see anyone who's embarrassed and say, I tried it, it didn't work. We only see the winners, but we never see the bodies along the way. So we really want to just block out the noise and really have a strategy. We really want to have a strategy because it's your strategy. Everyone on YouTube is not you, because when you take their advice, you're taking their mistakes, you're taking their pockets, you're taking everything that it took for them to get there. And you have to ask yourself, do you have the risk appetite, the risk profile, or even just the emotional, how can you say, steady hand to do something as risky as these other YouTubers? And this is just something we don't want to be, how can you say, too influenced by. We just want to have a strategy that's for you. You can share your ideas, you can research and look at other strategies and see what people are doing, but there's nothing wrong with having your own strategy and being boring, because it takes just as much energy and discipline to do nothing as it does to do something, as long as you know that doing nothing is upholding your current financial strategy. So here on the next slide, this is something to really reinforce. Again, I'm not bashing short-term investing, but really just want to highlight some losers along the way. So here on the right is Ray Dalio. I'm not sure if anyone's read the book Principles. Huge fan, phenomenal book. And he is the co-CIO of Bridgewater Hedge Fund, biggest hedge fund in the world. They have over $160 billion US under management. Last month, they made a mistake, they got it wrong, and they lost 20% in one quarter. So I'm not sure if for them to lose $30 billion in a matter of a few weeks, but imagine if you had the risk profile or the appetite to lose 20% of your salary. Do you have that? Do you have a steady hand? Do you have an emergency fund to say, yeah, I lost 20% of my salary or my value, but I can still, double down, or I can ride this wave. Here on the left, we want to look at just the buy and hold boring strategy. So if you took $10,000 and you invested it in the S.M.A.R.T 500 index on January 1st, 1980, and you took it out December 31st, 2018, so that's 38 years. And the value, if you never took it out, you just sat on your hands, you just rolled it out, you would have $659,515. And if you just missed the top 5 days, you're now down 35%. And the scale just shows, right? If you miss the top 50 days, imagine 30 years, 50 days is not a lot of time. And that's just, again, trying to time the market, that short-term investing. When in the long term, it was most profitable to really just do nothing. So this is really why we want to look at millennials and saying, yes, we are overwhelmed with access to resources, but it's really okay to just be boring. So here on the next slide, another visual, right? So right now we're in COVID-19, 2020 from day one has been awful, right? Started with Kobe, now here we are, a virus pandemic, right? Life is not good for the world. But no matter what, no matter which date, no matter which newspaper, no matter what country you're coming from, if you picked up a newspaper and looked at the headline, you would think the world was ending. A few years ago, we had Brexit. A decade ago, we had the financial crisis. A decade before that, we had the dot-com bubble. And we had, before that, in the 80s, we had Black Monday. Countless movies have been made about that one specific day. But even if you look at the market overall, it's trending up. In a sense, it's falling up the stairs. And we want to look at it as, even though there are these bumps on the charts, it goes up, it comes down, it goes up, it comes down. Unless we truly lose faith in our global financial system, this will always trend up, right? Because the market is built to make money. It's not built to stay down. It's built to make money. It's built for ownership. It's built for capital injections and investing. So it doesn't matter if you're putting USD, if you're converting your RMB, or you're doing some other currency. The whole idea is for you to make money, but to make money as long as possible, and not just to make a whole bunch of money today and lose more money tomorrow. It's the same reason why people choose not to go to the casino and rather keep it in their pocket. Whereas with the market, you don't want to short the market, you just want to ride and be long with the market. So let's go to the next one, give you some actual case studies. So here, so you'll make sure it's as practical as possible, right? So for most of us here in China, we're going to just base everything in CNY. So here we have Philip. He's 28 years old, South African, international kindergarten teacher, and he's making net of taxes. So this is cash money. He's making 18. He's spending 12 on his life. He has about 6,000 estimated excess. So he has about 50,000 RMB in actual savings. So that's cash money in his pocket that he's just letting rot away. Let's not talk about inflation or low interest rates right now. But he has no other assets. And he does have a life cover plan back home in SA that is 1 million Rand. So he does have his foundation. So, and on the bottom right hand, he has his interest is buying property in Cape Town. He's a 5 out of 10 risk profile. So we call that about balance. So not too risky, but not too conservative. And he does send money back home. So let's just give like some general advice of what he should potentially be doing. So if we were to divvy up his excess, so that's 6,000, right? So we're just saying you don't have to necessarily amend your monthly spending because we have our habits. We're living overseas. China's fun. You know, when the travel ban is lifted, everyone's going to want to go somewhere, right? So we shouldn't say, hey, change your spending habits and eat, allow me in every day. No, you've established your habits, but let's do something with the excess cash. So if we were to divvy it up, we can say on the monthly budget, you give yourself 1,500 RMB, and we'll put 2.5 in pensions and funds and equity. And then we'll do a property, start saving for a property, 2,000 a month. So he already has an emergency fund. So his foundation, which is that 3 to 4 months, as we mentioned before, because he's single, he has no actual dependents. He's just taking care of himself. And we want to make sure that you want to keep this in a non-Chinese account. Whereas when we think of investing or assets and things like that, you might hear things like political risk, currency risk, business risk. Us as foreigners living in someone else's country, I call it visa risk. Whereas one day you'll be at home cooking and the authorities might come knock on your door. And that would be your day that you have to leave. Or it might be, we've all heard the stories, whereas your school might get shut down and everyone's visa is now invalid. We don't wish this upon anyone, but these are the realities we have all heard before. So we just want to make sure that the bulk of your cash or your emergency fund should be offshore in your home account or maybe an international checking account, so that no matter what, whether you're here in the mainland or you're overseas in another country, that you always have access to your cash. So this is what we would want to do. So going on to the next one, if we mapped out those goals, breaking down that extra, he would, again, property investment. So let's say, for example, you want to buy a property for 1 million Rand. We would want to break that down. So 1 million Rand today is about 500,000 RMB. So 500,000 RMB, we want 40% of that. So it's about 200,000 RMB. When you're thinking about buying a property, you never want to buy it cash, right? Because there are multiple reasons that giving up all of your liquidity or all your cash is not in your best interest, because one, that's a form of putting all your eggs in one basket. But there's a reason that a bank is more likely to give you a mortgage as opposed to a small business loan, because they know, as well as we ourselves, that property is tried and true. It is proven, it's capital gains because of the value, and it also can generate income through the tenants. So when we think about, as an international citizen, you might not have the direct access or the credit or tax slips from your home country or where you're living. But when you have a certain amount of cash up front, it changes the dynamics of that relationship or that transaction. So for example, I know for me back home in the States, I could probably, if I was living and working there, get something for a mortgage, maybe at something between 3, 5, 10%. But because I'm not there and my track record is overseas for the past several years, I know I need more cash to let them know that, hey, I am legit. So when you're looking at property, again, you want between 30 and 40% cash up front. And based on saving the $2,000 each month, he'll be able to achieve this in 6 and 7 years. So his first investment property, he can have this between 6 and 7 years. And if he took that other 2.5 and invested it in equities or a pension, and he held it for 22 years, he would have invested $92,400 US, but it would be worth 180 to 247 if he just held it, not trading it, not shorting it, not taking the money out and trying to get a quick jump, just letting it hold. So his money doubled in a number of years. So we're not saying that this is going to be a golden gun like from 007 Nintendo 64, but we're going to say that this are some steps that you can at least get, or you can start to implement starting today. So let's look at another example. So here's Sandra, 35, Aussie, working in logistics, has a boyfriend here in China on a 3-year contract. She has 40,000 Aussie in savings, but 20,000 in actual student debt. No pension, no property, no life cover, has about $1,000 in Bitcoin. So she's making 28,000 CNY a month. Her expenses are 18. She has about a disposable 8, whereas 10 is just, we say, cushion money, Taobao money or something like that. So we can just give her some space to breathe, right? Main goals, liquidate, or just, we'll say, get rid of her student loans and a pension. So let's look at what we can do for her. So she has already a lump sum amount, right, of cash saved up. So we would take of that, how can we say, of that actual 40,000, we would actually just keep 16 of it for emergency fund. And then we would do a lump sum investment. So I guess 2 steps down, that 24,000 Aussie, and just do a lump sum investment into the market. And then because she has an excess of 8,000, she's going to put 5,000 a month RMB into an international pension. So all at once, she's going to do 2 separate investments, maybe different risk profiles. Maybe one will pay for maybe her children's tuition, or maybe one can be for her own retirement, or maybe, you know, things change. She's 35, so she'll have a different outlook on life when she turns 40, 45, 50, etc., or maybe when she leaves or decides to leave China. And then we gave her a holiday budget on a month of 3,000. Sorry about that. So she can still budget, you know, traveling, because it's East Asia. So here's the next screen. So mapping her goals. So if she paid a certain amount of money, again, just being debt free in 3 years, without using her emergency fund or the excess to pay the debt off, because paying it off over time will establish her credit, because we don't want to look at debt as a bad thing as long as we're able to manage it healthily. And if we were to say her lump sum investment at the bottom half, if she invested in, say, just one portfolio bond or just bought some index funds, ETFs, mutual funds, and she was getting 7% up for 15 years, it would be worth 66,000 to 16 Aussie. And if she did the contributions on a month-to-month basis for a private pension, and she did the 5,000 for 15 years, and 6% annual growth, she'll have contributed 198,000, but it'll be worth 307,242. So we want to look at this in practical steps. So we know everyone has their own situations where they might say, hey, I'm interested in property or interested in equities and things like that. We want to just use numbers that we have come across, whether it's through our clients, people who have met with us, friends, and just say, okay, here are some numbers that aren't like gigantic, but are you able to save 2.5, 2,500 RMB a month, or even as much as 5,000 RMB a month? And just think about it. Or if you have saved, a number of dollars, or you want to manage your student loans, how can we achieve all of these things and head in the same direction? So on the next slide, this is really just the biggest thing we really want to say is before you actually look at investing, I know Armando is really just beat it over the head, but the emergency fund is really the biggest thing because one, the COVID-19 has put the economy around the world on hold. In February, there was a sell-off. The markets around the world fell 35%, right? Similar to the financial crisis, there was a huge drop. There was 20 months of recession, but there were still people investing, and for 10 years, their money grew. Now, COVID will come and it will pass. We have to treat it as if the world would keep turning. But if you have that emergency fund, this will put you in a position where you can actually capitalize on the discounted equities and see what's actually available. Next, we want to make sure you have a consistent income. Some people are coming out of a salary reduction or are transitioning to a new position, but we want to make sure that you are in a situation that's steady. And the self-assessment is something that, or SMART goals, is just, again, sitting down with yourself. Again, just say, hey, what are your goals? What do you really want to do? If you want to be in China, stay out of China. If you want to buy 10 properties or have $10 million in assets, you need to write it down and make it real because, plans are, a dream is nothing more, than a plan without a strategy. So we really want to look at that. And then we want to be as objective as possible by scheduling a financial review because we can be a little bit, how can you say, tunnel vision when we're just thinking about ourselves. And maybe someone, whether it's one of us or maybe someone else you trust with a financial background, can give you an objective or a third party's view, right? They won't be emotionally or as emotionally attached to you and your goals. So maybe they can just say, well, have you considered this? Or maybe you can think about adjusting your budget in this way. So that's kind of how we want to look at it when we think about, as a millennial, what do I need to get started and which direction should I head first? So this would be the checklist that you should be looking at. All right.
Well, thank you so much, Deshawn, and thank you so much, Chiu. That is excellent presentation and giving us a lot of information, and we've had a lot of questions come in as well. But first of all, I want to get your opinion on the results of the poll that we have done. So I'm going to share the results now, and it's overwhelmingly the biggest challenge facing millennials with investing is not knowing where to start. So, Deshawn, what do you think about those results? Most people do not know where to start. Is that a surprise to you?
No, I would say that there's so much information out there, it can be overwhelming. So you might feel like your first step is not the right step because the information and just the content that's available is literally pulling you in every direction. So you might think, how can all of this information actually be right for me?
Yeah, no, absolutely. Any thoughts on that, Chiu, on those results?
No, not really. Nothing to add. We cannot be experts at everything. So of course, it's always good to have an idea of where we're heading. But same as Deshawn, what he says, right now we have access to so many things. That's why there was also a similar answer that I saw on the poll that says too much, like overthinking. So sometimes people don't know where to start, and they already have a big idea, but because there's so much out there, they just cannot take any action, and it's pretty much the same. So it's a very common thing that I get on a day-to-day job.
Yeah, no, absolutely. And hopefully from this webinar, people have a little clearer idea of where to start. That's obviously the purpose of why we're holding webinars like this. So this first question has come in. I'm going to put it to you first of all, Chiu. So it came from Stephen in the webinar group. Often we hear the term, don't put all your eggs in one basket. So as a young couple lacking confidence in our investment know-how, looking to build wealth for our long-term future, what would be the best way to spread our options or diversify our investments? In short, what baskets should we be putting our eggs in?
Very specific question. So of course,
Yeah.
I don't want to be too generic, like it all depends, but it does. But let's talk about the pyramid. Assuming Steven already has his emergency fund and a consistent income, and he's just starting like from scratch. So in this case, where Deshawn already showed us the difference between trying to pick specific stocks, specific investments to make the best portfolio, versus just being boring, if you want to call it that way, and just ride the performance of the whole economy. That would be my first suggestion. If you are just starting, just go with the flow. Go for something steady, for something consistent. That's level 2, as we mentioned, a steady investment. So that will be a diversified portfolio that just basically does what the whole economy. We always focus on the developed countries to start with, because that's a more consistent way to start. And yeah, later then you can start making something more spicy, something more interesting, but focus first on the basic things.
Yeah, no, that's solid advice. I like that. So this one for you, Deshawn, from Mark in the WeChat group again. Should millennials be considering property as an investment, given the large down payments required and the general unwillingness of banks to lend to first-time buyers?
You should always be considering property. Maybe we have to just open our lens and maybe just widen the options available, because maybe you're thinking about buying a property and actually going into owning the house itself and renting it the more traditional way. But when we think of property, we can think about property investment companies, which are real estate investment trusts, which pay dividends. So you're literally, instead of maybe investing in a mutual fund, you're just investing in a real estate investment trust. Or you can look at developers who are out there and are saying, hey, we have rental properties and all we need is 30% down. So we have to think about property, but think about what is available on a global scale, because us as expats have already considered global career opportunities. So we, at the same time, we should consider global real estate opportunities. Being in China, we realize there are things out there beyond our country. So why not buy a property somewhere else, like Germany or Spain or the UK or Portugal, for example, even though you might be from New Zealand or Antarctica or something like that, right?
Quite a few penguins logging in. I did see that. So one for you then, Armando. How does a student apply all these principles, considering the fact that our income is limited and we are dependent?
Yeah, that's a good one. In that case, I will focus on invest in knowledge, invest in knowing. Of course, it's going to be different, because if you're not working yet, I mean, you could, if you want to go out and try to do some like part-time job or internship just to get some extra cash, just to pay your trip or something. But realistically, you're not in the workforce yet. So in this case, I will focus on building knowledge that's going to get me ready for when I'm actually start having a steady income. And it's good if you can start practicing this concept that we mentioned. Try to see if by now you can find a way to build an emergency fund, even though you still rely on maybe your parents or maybe somewhere a scholarship or something. But try to define, okay, usually if I go out with friends or something, for a month I need 5,000 yuan. So try to see if you can already start building the habits, because these habits are going to stay forever. So as a student, I will focus on that first, building good money habits and building money investment knowledge.
Yeah, excellent advice. And I'm going to throw the next one to you as well, Chiu, given the nature of the question. So how to open an account abroad? I believe that's a bank account. It came up at the same kind of time. If one's country is unstable. Okay.
Yeah, definitely for me. For those who don't know, I'm from Mexico, Latin America. Just to specify in case you didn't know. But it's true that actually most of my clients are from these regions as well. And for obvious reasons, we don't want to have all of our savings in China, for what Deshawn already explained. And also, we don't want to have everything back home. We may need something back home for X reason. Maybe you have a house there, maybe you send money to your family, but your main thing, you want to get somewhere else. So in this case, how to open one or where to look for. Just think of what are the jurisdictions that make it easier for foreigners, for professional or global citizens to do it. Because there are some countries where you actually need to go physically and open an account. Some other where it's a little bit more flexible. Also think about the jurisdictions that provide the most security as well. Every country has their own regulations. There are some countries that give you also government protection, that they say any financial institution here, if it goes busted, a percentage of your capital is protected. We know that there's no anymore, it's too big to fail. I mean, we know what happened in 2008. People had savings and they lost a lot of that. So then that's when you start looking what fits my own needs.
Yeah, excellent. But just to be clear on the how to, someone sat here in China can open an account without leaving the country in an international place.
Yes, definitely. There are options for us living in China. I do it quite often for most of my Spanish-speaking clients, but it's for everyone. You don't have to speak Spanish to get one. Don't worry about that.
Okay, great news. So from Gregor, this one's for you, Deshawn. What advice do you have for someone who wants to invest but has a lot of student loan debt?
Okay, fair question. Well, I have a how can I say, a saying about that. It's don't rush to pay the bank's profits. Because if you look at student debt as a weight on you or like a ball and chain, then that's how you would manage it. We have to manage it healthily. So again, I try to mention it in the second case study, like if you have student debt, just set amount, not only the minimum payment, but maybe we can go above it a little bit while you can cut into that principal. But we don't want to say like, oh, I can't do anything because I have student debts. Because if you're looking at mortgages or if you're looking at any other investments, they recognize that you use it as a tool. So we want to look at your budget and say, okay, where is the middle ground where you can put a couple thousand RMB a month into maybe some equities or pension and still manage your student debt, right? Because we don't want to look at it as I have to pay it off. We want to look at it as how can I manage the two in the meantime, because you don't want to spend 30 years or 5 years and 10 years rushing to pay the debt off when you have the same opportunity to invest maybe a smaller amount during that same period, because there isn't like a perfect time to invest. It's really just about investing as long as you can. So even if you start investing with maybe not a full commitment like a monthly pension, but maybe like a brokerage account or online account where you can just do a little bit every month, then that can still benefit you in the long term.
Okay, sounds like very good advice. Okay, so I've just lost that question. Let me go back up. So from Nix, when should I start investing for retirement? As not in my home country, have not really contributed to pension. First, Chiu. Just want to start your mic. Yeah.
Yes. So you should have started 20 years ago. Kidding. No. If you're still on the graph, the earlier the better. So think of your own money flow or your cash flow. If you already know how much you're spending for your lifestyle and everything, then you know what's your disposable. So definitely the sooner the better. You need to just define what's your goal, not just I need to invest, that's it. You need to sit down, define what's retirement looking like for you. For me, I don't like using the word retirement because that sounds very outdated. For me, it's more financial freedom, but it's the same. It usually takes a long time as well. But yeah, the earlier the better. If you're thinking of continue being an international citizen, then I will look for international structures. Same myself, I work in Mexico for a short time. So myself, I try to do a strategy that is a very international, because I may be in China for the next 5 to 10 years. Eventually, I want to move somewhere else. So I want that structure to follow me around. So that's the thing I will look for, especially if I already know that I want to continue being a global citizen.
Excellent. Fantastic. So we are out of time, guys. So I want to thank you so much for that. There was a lot of information. We've had so many questions come in. And as you can see on the previous slide, and we've had so much information, what we've heard throughout this is that you've got information, there is advice out there, now it's time to take action, okay? So what we're offering is, if you want to take action on any of the information, think about where you are in your process and where you are in, in the scale of everything that's happened today. And think about how would you like us to contact you? Various different methods there, whether it's coming into our office or whether it's over the phone digitally, we're available to anybody. But let us know how you would like to do that if you want to take action on any of the information that you've heard today, or you just want a bit more advice from a professional. There it is for you. And we've had lots of questions coming in and even other ones popping up as I speak. So what we're going to do is, after this webinar, I'm going to give the questions to the two presenters, to Chiu and to Deshawn, and we'll feed those questions and answers into the WeChat group during the course of the day tomorrow. So first of all, I'd like to say, Chiu, thank you very much for your presentation.
Yeah, thank you very much for hosting, for inviting, and definitely we'll share all the answers with everyone. If you're on the WeChat group, get in touch with whoever invited you to the webinar, just as a reminder. So you can also see what are the answers for all those long list of questions that you got.
Yeah, absolutely. And Deshawn, thank you so much for your presentation and your answering the questions as well.
Thanks.
Excellent. And both of those are in the WeChat group if you want to add them and have a chat as well. Yeah, as Chiu said, talk to the person who invited you to get an invite to that. And I want to thank you. Thank you for all your questions that are firing in again and again. And thank you for attending, and thank you for your donations to charity as well. We've been supporting Give to Asia throughout this DeVere webinar series, and they've been such great work, starting off in Wuhan, now across Asia, frontline pandemic response, and we know how important that is. So to everyone out there, stay safe, stay healthy. Good evening.